Hey, welcome back to Clear Path Retirement Radio. I am your host, Stuart Smith, and I am here with Mitch Davies, and here it is time for my favorite part of the whole show. That is a segment we do every week called Mitch's Market Minute, and he is here to get it started. Let's go, Mitch.
Thank you, Stuart. I'm excited as always. This is the Market Minute, where we're going to stick to the same structure we've had, where we talk about first what's going on overall in the market, where we're at with the major indices, what we're seeing today, right? And then we're going to talk about what's been going on for the year, and then what we're focused on, right? We're always trying to pick one thing, whether it's a new teaching point or whether it's current event. And this week we've got an interesting one. But to start off, we've had a rough week with we've been talking about this segment, we've been talking about the Middle East and what's going on over there with Iran and Israel and all this stuff. So Monday opened up not great. Tuesday, not great. We've had a tough week, but the S&P still sits around 6,800. The Dow's right at about 48,000, and the NASDAQ's a little over 22,000. So nothing major there. We're still kind of trading in what we'd call a range from where we've opened up the year. Nothing significant. The Volatility Index, the VIX, we introduced this last week, and this is what we use in the market to determine overall volatility. In a healthy market, we'd like to see this index trading at anywhere from 12 to 14 is pretty standard. In a bull market, the lower the better. The lower this number is, the less volatility. We saw it shoot up yesterday to 25, 26. It came down today where it's at 21. So it's starting to trend down, but we're still seeing it above 20. So we've still got some overall volatility. Another metric I want to introduce, and we'll use this as it's a general gauge that people understand, is the Fear and Greed Index. You might have heard this. Warren Buffett's notable for using it. It's trading around 37 today. And I found it interesting. 1 year ago today was when we had around the same sort of thing. And the Fear and Greed Index was at 11. So extremely low. 0 being the most fear you could possibly have, 100 being the best bull market ever. We're trading around 37 in this index. What that means is people are still generally scared. And last year, this time when it was at 11, the S&P was at 5,800. And then about a week or two after that, it went on to run up another 15%. So historically, times under 30 or so on this index have proved to be great buying opportunities. So wanted to introduce that. The Volatility Index and the Fear and Greed Index are two we're going to continue to watch. But what, again, everyone's been talking about is this war in Iran, essentially. The U.S. has joined up with Israel to strike Iran, take out leadership there. There's a lot going on. You guys have heard about it. But I want to talk about how that's affecting the markets. And if you've been listening to the show, pretty much every week, we've been talking about the constraint on the energy sector. Whether it's oil, whether it's these rare earth minerals, whether it's any of these things, there's a huge rush. We've seen commodities like gold and silver do really well. We've seen the energy sector and these consumer staple companies outperforming the market this year. And this is because of these rare earth minerals and these commodities that are being used to power all this AI, all this stuff that we're doing is extremely scarce right now. And when we have an event like we're having right now, so the U.S. oil supply, the global oil supply rather, is extremely concentrated in the Middle East. We have a large basin here in the southeast of the U.S., but the biggest basin is in the UAE area over in the Middle East. And there's a strait that runs through under Iran, in between Iran and Qatar, essentially. And it's called the Strait of Hormuz. And this is where 20% of the global oil ships through. Over 20 million barrels a day move through this. This is an extremely dense region, and it's only 20 miles long, which is really interesting. So what Iran did last year, what they've done this year, is when there's geopolitical tension, they shut it down. They technically have jurisdiction over that area. And what they'll say is, hey, no more ships can pass. And they'll threaten to use, since it's only 20 miles long, they have the ability to use underwater mines and all these types of war tactics to scare ships from going in, because these aren't battleships, right? These are oil tankers. They're not there to fight. They're there to just transport oil. And they have shut this down and are threatening action against any ships that go through there. So when we see that, we saw oil shoot up to $80 a barrel. It's down to 74. You guys may have seen this when you went to fill up your tanks. But this happened last year, and it only lasted a couple weeks, and I don't expect it to last long. There's just too much global pressure. But what this tells us, and what we've been trying to do with people, is focus on these energy companies. We've been broadly getting exposure to these energy ETFs, and there's a lot of ways you can get exposure to all of these companies that are producing oil, mining these minerals. And another sector that it does really well in these times is the defense sector. We talked about that earlier. There's the defense ETF, one of the main ones that we use, is up almost 15% year to date. So another sector that does extremely well in these times, and this is something that we've been talking to clients about, and something that we've been urging. We urged last week, urged every week on here, to take a look at your portfolio. And if you're just invested in the big tech, the big S&P companies, it could be a great time to shift some into these things, because this war, quote unquote, could go on for a few weeks, could go on for a couple months. We don't know. Hopefully it ends sooner rather than later, but we got to look at how this affects retirees' money. So what I challenge is, take a look at your allocations. Again, if you're overly exposed to one sector, just tech, look at diversifying into some of these energy plays in particular, because this whole industry has a lot of tension and a lot of room to grow.
Yeah. Awesome. Okay. Thanks for that information, Mitch. That was good stuff, good content there, and hope everybody takes something away from that. I tell you, it made me flash back to my days of being on the Roosevelt, an aircraft carrier, floating through the Mediterranean and the Suez Canal and all of that fun stuff, and how interesting all that was, and to be in those places like Bahrain and United Arab Emirates and some very interesting places over there. Brought back memories.